there was a law that allowed Acorn to put on this pressure. The Community Reinvestment Act enabled Acorn to levy complaints against banks when they wanted to merge or expand if they hadn't made sufficient loans in minority communities. And so using this law, Acorn was able to pressure banks into making high-risk loans. Well, Acorn really is at the root in many ways of the problem here. Acorn is a group of community organizers, and they specialize in putting pressure, really kind of intimidation tactics on banks to get these banks to make high-risk loans to low-credit customers. And of course, that's very much the source of this whole problem. And they do things like breaking into the private offices of bank officials. They even show up at the homes of bank officials to scare them and their families. They send demonstrators into the lobbies of banks, all to get the banks to make these high-risk loans to people with low credit.
Okay, and what is Barack Obama's affiliation with Acorn?
Well, Barack Obama had very close ties to Acorn, and in particular to the head of Chicago Acorn. Her name was Madeleine Talbot. Madeleine Talbot was an absolute pioneer of these intimidation tactics against banks, and Barack Obama was selected by Madeleine Talbot when he was just sort of a wet behind-the-ears organizer. She recognized his abilities, and she asked him to train her personal staff. When he came back to Chicago from law school, and Madeleine Talbot was really beginning her campaign against these banks, Barack Obama trained the leadership of organizers in Acorn in Chicago.
Oh, man.
And when Barack Obama,
So Stanley, what you're saying, you're talking about how Acorn in the past has pressured banks to illegally make loans to people who cannot afford houses. So in effect, you're saying Acorn is one of the foundation or the cornerstones of the crisis that we're in right now.
That's absolutely right.
Would you consider, by the way, rolling back the Community Reinvestment Act, which a lot of people say triggered this, mandating banks and other lenders to make substandard loans in the first place, and the creator of the subprime mortgages back in the middle 90s? Is it time to take a look at the Community Reinvestment Act?
Absolutely, Larry. There were people who predicted that the Community Reinvestment Act might lead to reckless and unsound lending practices, just to sort of fill a amount of, I don't like to use the word quota, but certain percentages of a home, of the bank's lending practices. Yes, it has to be re-examined. It has to be judged by its effect, and we need to find out how this particular system affected the overall insolvency of the subprime lending issue. And I think I'm not saying it needs to be repealed, but it certainly needs to be re-examined and what its effects have been, and we'll be able to figure that out.
CRA may not be necessary to ensure that all segments of our economy enjoy access to credit. There are some who argue that CRA should be extended to credit unions and other segments of the financial services industry that currently fall outside the law's coverage. Indeed, rather than expanding the regulatory dragnet, our focus must be on providing appropriate regulatory relief to our financial institutions so they're free to serve the needs of their communities, unshackled by outdated regulatory mandates and bureaucratic red tape. It's for that reason I look forward to working with my colleagues on both sides of the aisles to develop an appropriate regulatory relief package that Congress can act on this year. The bill we passed last year was a good first step, but much remains to be done if we are serious about maintaining a strong community banking sector in this country.
The Community Reinvestment Act is oftentimes not enforced as it should be. We've got to open up bank branches. We've got to give people access to financing so that they're not going to a payday loan operation.
This hearing begins what will be one of the most important initiatives that this committee will be undertaking, and that I hope the whole Congress will undertake. In 1977, before any of us on this committee got here, the Congress passed the Community Reinvestment Act. We're now looking at this act 31 years later, and there are two areas where I believe we should be amending it to enhance its effectiveness. First, if you go back to 1977, the Community Reinvestment Act covered most of the institutions that did the kind of activity it was meant to cover. 31 years later, there has been a great increase in the number and type of institutions that engage in these forms of activities who are not covered by CRA. And so the first question we will address is whether or not, and if so, how, to expand the obligations of the Community Reinvestment Act to institutions that now do the kinds of things that banks were doing 31 years ago, but either weren't doing them then or didn't exist then. That is, a much smaller piece of the relevant action is now covered by CRA that should have been. Secondly, there are questions about the enforcement of CRA. There have been arguments from some that it has been that there's been excessive paperwork, and we are open to listening to that, particularly from some of the smaller institutions. But there is also a concern that many people have, myself included, that there is a limited chance to enforce CRA. CRA ratings come into play when there's a change in ownership of the bank, but that shouldn't be the only time in which that happens. There ought to be, I believe, some forms of enforcement, and not just enforcement in a negative sense, but reward for those institutions that have done well. There are also questions about whether or not the range of activities covered and for which entities get credit should be expanded.
I had the good fortune of being president of a branch of the NAACP, and I have a first-hand understanding of how the CRA can be of great benefit in terms of helping financial institutions to go into areas that they may not have had a real good look at.
The Community Reinvestment Act is oftentimes not enforced as it should be. We've got to open up bank branches. We've got to give people access to financing so that they're not going to a payday loan operation.